Thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, well, we create these videos on a daily basis and explain what's impacting mortgage rates on a daily basis. We kind of inform you what's economic calendar, headline news, sometimes the sentiment in the markets have changed, and kind of give that information out to you guys. So for those of you following mortgage rates, well, this will hopefully be a good learning tool, or at least give you some updates as to what's really going on in the market here. So a little bit about myself. I am a loan officer. I do work with the national lender. We do loans in all 50 states. So if you guys are looking to refinance or purchase, please reach out. We're here to help you guys out. We can help you with those. If you're, we also are a resource for you folks. So if you guys just got questions about stuff, whether if it's something about rates, or if you guys got questions about mortgage uh, loan programs available out there, or about the process, we're here to answer those questions as well. So please feel free to reach out to us. Without further ado, we'll just jump right into it. We'll start off with the economic calendar. We do got pretty much housing data today, but one thing I do kind of like to look at is the MBA releases the mortgage loan activity report, which kind of comes out every Wednesday. And as we can see here, it's broken down in purchase and refinance. So as we can see here, the purchase side actually increased from week over week. And then we also had a drop in the refinance. Why did we have a drop in refinance? Well, if you're not aware, we've been having over the last 2 or 3 weeks, we've been having a pretty big drop in the mortgage-backed securities, which means higher rates. Rates have been rising as a result. Same thing with the yields. You can see the yields rising as a result of there. So over the last 3 weeks, rates have been going up, and so that means it's getting a lot of people off the fence if they're out looking to buy, wanting to quickly buy before the rates get up too high. So we got people on the purchase side trying to get off the fence and go ahead and buy while the rates are still low, and people jump up too far. And then a refinance, of course, a lot of people are losing those lower rates, so they don't have a need to refinance. We also got housing starts for the month of December, month over month. It jumped up. November's numbers dropped slightly from 1.679 to 1.678 seasonally adjusted annualized units. Uh, Forecast was supposed to dip a little bit to 1.65. However, it rose in December to 1.702. That rose month over month 1.4%. And then last but not least, we got future housing starts, which is building permits for the month of December. So back in November, it was at 1.717. It was supposed to dip a little bit to 1.701. However, it went upwards to 1.873. Now, this will be interesting because yesterday we did get the Home Builders Index, which is kind of the NAHB Home Builders Index, and it dropped in January. So what that does is the index that gauges their confidence level. And so January it dropped a little. The confidence dropped a little bit due to partially higher rates, but also their the labor shortage as well as the higher costs associated with it. So lumber price has been going upwards if you haven't known, and so again they are back to square one. So we'll have to wait and see how this translates into January's numbers. So next month when we get those, we'll want to kind of pay closer attention to see what's going on with the new home sales. And then, of course, the home building permits month over month, percentage-wise, it rose 9.1% there. Now, stocks are kind of mixed territory. Dow's the only one kind of struggling. It's taking its cue mostly from the corporate earnings reports. A lot of big corporations report losses, including Goldman Sachs, American Express, Caterpillar. A few of those companies, a few others also expressed losses. NASDAQ is up a little bit today due to the yields here. We'll talk a little bit more about that in a bit, but so that's kind of helping Nasdaq. It's really taken its cue off the yields, rise in yields, which is taking a bit of a beating. And then of course S&P 500 both Nasdaq and S&P are both in positive territory so far today as a result. A lot of it has to do with, again, a couple weeks ago we had the Fed minutes released, and they indicated in their policies, and we had a few speakers kind of come out with a little more aggressive tone in terms of the balance sheet. So most of this came in, we had everything priced in accordingly, but that balance sheet is kind of what threw a wrench in the wrench in the whole plan there. And what that did was that they are talking about maybe potentially being more aggressive in terms of lowering the balance sheet. So instead of just waiting for them to mature and then stop reinvesting, they're talking about maybe potentially selling off more of those, so of their portfolio. And that could create a bit more in the markets, a bit more too much supply in the markets, and kind of hurt things a bit. So we'll have to kind of wait and see. Right now, Fed members are in a quiet mode because next week they will have their FOMC next week, Tuesday and Wednesday. We're not expecting rate hikes yet, but the investors will be watching to see what they say. This will be the first one of the year, and especially since that balance sheet, to see if Jerome Powell addresses that, if they're going to be more aggressive by selling, or if they're just going to be more passive in terms of just let them mature and then not reinvest, continue reinvesting. So that would be a big part of it. So coming into next week. And so expect continued choppiness in the markets as a result in the meanwhile, because they're just kind of taking into their own consideration and not really knowing there's a lot of uncertainty in that markets in that regards there. And of course, inflation's been going out of control. There's projections that oil prices could spike up to $105 a barrel about towards the end of the year. So that's a possibility as well. That's the last thing we really want, because that creates more inflation in our data right now. As oil prices go up, your cost of transportation, moving goods from one place to the next place, those will be costs added to the wholesale, which will eventually get passed on to the consumer. Even though we remove that decor, but at some point those costs get absorbed as a result. Let's jump over to mortgage-backed securities, see how mortgage rates are doing today. We are doing a lot better than yesterday. Yesterday we dropped about 62 basis points. So we have this opening gap here where we started and up downwards. We're up about 36 basis points. We started a little higher than where we left off yesterday, and we're about where we started yesterday. So pricing is better today, thankfully. We're gaining some of that loss from yesterday, but we're going to have these ebbs and flows. We're going to have some reds, which are mortgage-backed securities going downwards, and we're going to have these greens going up. So it's going to be, over time, it's going to go down. It's going to go downwards, but we're going to have these areas where we'll kind of work our way back upwards to the 25-day moving average, and then catch up and then work our way back downwards. So just be cautious. We're going to have these ebbs and flows here. But today we got a little improvement, a little reprieve in our pricing from yesterday's big sell-off today. So that's going to be very helpful for us. And here's kind of look at what the volatility of today. So we start upwards, start downwards, upwards, and kind of work our way up and staying upwards for the most part here. As a result, and now let's go ahead and take a look at the treasuries. Sorry about that. And treasury, same thing. We touched off of this new technical level yesterday and stayed right about that same level. And today we're working our way downwards. So we're just under 1.83 and approaching the next floor here. So we'll have to see if it remains in that range or if it could break below it and hopefully get down closer to the 25-day moving average. That would be most ideal for us. If we could get some of these back to their 25-day moving average, even though they are a little bit higher, but of course, it would help us out to get some improvement and more stability, hopefully, with our pricing. Lastly, let's take a look at the national average for conforming loan limits. Again, these do have points built into them, and so 30-year fixed now jumped up to 3.7, and the 15-year is at 2.95. So if you follow my videos, you know that there's no one size fit all. There's a lot of variables that go into pricing. So if you guys need a price check on rates, please feel free to reach out. We're here to help you guys out. We can certainly get that for you guys as well. If you guys like these videos, we're pretty much wrapping up here. If you guys like these videos, please help us out and smash that like button and share it. We greatly appreciate you folks watching and watching these videos, and hopefully we can continue bringing these out if you guys can help support. We appreciate you guys. Again, if you guys got questions, we're here to answer anything out there as well. So thank you very much, and we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Thank you. Bye-bye.